What's up everyone, it's Kadi with MoneyVest. So in today's video, we are going to be talking about Endava PLC. This is a medical technology company that dropped close to 40% yesterday. A lot of you were asking questions in our Discord about this company. From what I've seen in the company's earnings for the second quarter fiscal year 24, and of course reporting for the entire fiscal year 2024 guidance, it does seem like there was a bit of an overreaction from the company's stock price because of the fact that it dropped close to 40% on the back of these earnings. They did miss on earnings expectations, so EPS expectations were a little bit closer to $1. And if you take a look, just 1 second, so EPS expectations were about 38 cents, and they actually reported 38.2 cents. So we did get a small beat on EPS and then a small miss on revenue, coming in at $233 million, and of course dropping close to 41% on the day. Market cap now sitting at just over $2 billion. So in this video, I'm going to break down everything you need to know about this company. We're going to take a look at the valuation, the total addressable market, and of course whether it makes sense to be buying Endava here at these levels or wait for better and better prices. As always, make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. The links to our Discord and Patreon is going to be down below. We do have our moneyvest.com platform launching very soon towards the end of this month. On March 31st, we'll have the early beta launch for all the members, and then over time we're going to have a lot more features, a lot more upgrades for everyone to access, which is going to allow you to do very, very comprehensive and detailed fundamental and macro analysis. And that's going to help you make your own investment decisions when it comes to trading and investing in the market. So again, link's going to be down below. We'd love to have you on board. And again, do follow me on Instagram as well. My handle is going to be CastWRP, and I do post a lot of interesting stories, portfolio updates, profit and losses, and then of course tips and strategies. All that stuff is going to be down below in the link in the description. So starting with Endava, again, this is a medical technology company that's super profitable, very, very nice, consistent growing revenues. They do report their revenues and numbers in pounds as opposed to in US dollar terms. Large and fast growing market opportunity, transformation through combined innovative technologies with deep industry expertise, founder-led experienced management team with strong culture and strong growth and financial performance as well, and ideal to production capabilities, distributed, agile at scale. And this right here is going to be their total addressable market with a 16.3% CAGR that they are forecasting, and a $3.4 trillion total addressable market by 2026. So again, you'll notice that it is a provision technology services. The company was founded by John Edward in 2000, headquartered in London in the UK as well. So this right here is going to be the second quarter fiscal year 2024 numbers. This is broken down by geography, and you'll notice that majority of the revenue is coming from Western Europe and European Union. Then we've got Europe, non-EU countries making up remainder of 22%. That's about 74%. And then of course, North America is a very small market of about 3%. Latin America is a pretty big market for Endava at over 14%. And Asia Pacific is going to be 9%, including the Middle East, for the company as well. This right here is going to be the revenue. So since fiscal year 2019 to 2023, they've seen growth of about 28, almost 29% on a compounded annual basis. For the entire fiscal year 2023, they're sitting on well over 794, almost 800 million pounds. And then if you compare 6 months of fiscal year 24 versus 6 months of fiscal year 23, they did see a little bit of a decline. So 372 million pounds in the first 6 months of 24, compared to 401 million, which was first 6 months of 2023. So we are seeing a slight decrease on a year-over-year basis. When it comes to profitability, a significant decline, and that is perhaps one of the reasons why the stock price is down the way it is, because of the significant decline on a year-over-year basis, and also not the best guidance when it comes to the entire fiscal year 2024. So just under 28 million pounds in profitability, profit before tax for the company in the first 6 months, and adjusted profit before tax for the entire fiscal year 23, they were sitting at just over 164.2 million pounds as well. This right here is going to be their client relationship. So top 10 clients revenue percentage in the second quarter of fiscal year 24, 34% of the revenue makes up just by top 10 clients for the company. And this right here is going to be the number of clients, which once again did see a little bit of a downtick quarter over quarter. Actually, year over year, we came down from 156 down to 150 clients that are generating revenues of well over £1 million. And again, you'll notice that that downtick also is some weakness in the overall business and the strength of the company as well. Now, this right here is going to be in dollar terms, so just over $1 billion in 2023 for the company in terms of revenue. Total revenue is sitting at just over $1 billion and gross profit of $342 million. That's about a 34 to 35% gross profit margin. Operating income sitting at about $154 million. But what I do want to highlight here is just the sheer consistency of the company's revenue growth. As you can see in the bar graph, this is really what consistency looks like. And again, we've talked, the reason why we look at the past historical data is because in most things in life, it's very habitual. If the company's been able to grow revenues in the past, we've got a very nice, good predictability that they're going to continue to grow revenues in the future as well. So gross profit here, $37.2 million, almost 10xing to $342 million, and operating income has gone from $17 million to $154 million for the company as well. So very nice, consistent growth over the last 10 years for revenue, gross profit, and operating income as well. If you take a look at the bottom line, earnings per share has also gone from 28 cents to well over $2 per share. So again, almost 10xing, and diluted shares outstanding has gone from 50 million to 58 million. So that is again a very, very small amount of share dilution, which again is not a crazy dilution, and of course the company's not buying back shares either, but this is quite reasonable when you consider the company's number of share increases here over time. EBITDA has gone from $19 million to well over $180 million. Again, the reason why we look at EBITDA is because it kind of gives us an idea of operating profitability, because it does not include interest, taxes, depreciation, amortization. So $180 million, once again, almost 10xing over the last 10 years for the business. This right here is one of the reasons why Endava is actually very attractive at these levels, considering the valuations come down to really, really low levels. We're looking at 14 to 18 times forward earnings here. Forward earnings multiple is higher compared to trailing, and the reason for that is because expected growth rate is lower. In fact, I think the earnings expectations are for a decline on a year-over-year basis for the entire fiscal year 24. Price to sales, we're looking at a little bit over 2, and price to cash flow, we're looking at 12 to 15 times cash flow, which again is quite reasonable. If you do 1 divided by 14, we're looking for a free cash flow yield of just over 7%, which again is, in my opinion, quite reasonable. Profit margins, as I mentioned earlier, gross profit margins 30%, net income margins of just under 9%, free cash flow margins of a little bit over 11%, and then we do have pretty reasonable to decent return on capital, assets, and equity of just over 8 to 12% respectively. So speaking of efficiency, speaking of margins and profitability, and speaking of valuation, Endava kind of checks off a lot of the boxes. Even the balance sheet is pretty solid because the company does have more cash than debt on the balance sheet. So if you come over to the fundamentals and then of course going over to statements and then balance sheet, we do have negative net debt, which is exactly what we want to see. The company's got more cash than debt on the balance sheet of negative $177 million. So that again is fantastic. And this right here is the earnings expectation. So the reason why the stock is selling off the way it is a couple of reasons. Number one, we did see declines on a year-over-year basis, not only for the number of customers generating over $1 million in revenue per year, but also in the overall profitability, and of course revenue slightly declining year over year, and earnings expectations are also not that great for the entire fiscal year 24. They're expected to go down by 27% and then re-accelerate back higher. So Endava is one of those companies that may not perform rest of 2024 on the back of these future earnings that we're going to get, but starting 2025, when the comps are much easier, much better to beat, and we start to see that re-acceleration in the business, once again, there is a possibility that Endava kind of puts itself back on track to potentially seeing that recovery back for the price itself. Now, they do expect revenue in the range of 772 to 735 million pounds here for the entire year, and diluted earnings per share in the range of about 1.09 to 122 pounds per share for the company as well, which again kind of converts to about $1.27 per share for the company. And right now the stock price is trading at about $37. So if you do the math, 37 divided by $1.22, we're looking at about 30 times forward earnings multiple. Just want to make sure that that math is indeed correct, because 1 British pound is actually close to $1.27. So 122 multiplied by 127 is actually going to be 156. So 37 divided by 156, we're looking at 23 times earnings multiple on a forward basis is where we are with this company at the moment. So I think it's going to take some time to recover. I think the momentum is very much against it. this does seem to be a little bit of an overreaction, I would say, because a 41% drop on the back of a 27% decline in earnings, forecasted earnings, is definitely a little bit too much in my opinion. So the next support really is going to be sitting roughly at around $35, $36. This would make for a good potential swing trading opportunity, but from a long-term investment perspective, I think it's got some time to reaccelerate that revenue and those earnings back higher. Balance sheet's good, margins are good, valuation's quite reasonably low compared to the other opportunities in the market. The only problem here is the expected earnings and of course the revenue and the profitability for 2024. So keep a close eye at $34 to $35. It is incredibly oversold with a huge gap to fill on the upside. 13 RSI is really low, so $34 to $35 is going to be that support level to watch, but only long opportunities are only valid until we see some type of confirmation on the way back up. Until then, the momentum is very much against it. This would be kind of like catching a falling knife here, considering how strong the momentum is to the downside. So $34 to $35 is going to be that near-term support, all the way down to its pandemic lows from back in March 2020. That's going to be $28 per share for the company as well. So those right there are going to be a couple support levels to watch. I'll keep a close eye on this and send out alerts in our Discord if I do find any tradable opportunities. But like I said, the momentum needs to stabilize a little bit. We need to exhaust that selling pressure before we can see any type of recovery back higher. And that confirmation is very important for us to see Endava going back higher to fill this gap between $50 to as much as $62 per share. So that $12 range, still that gap is going to be pretty wide for Endava. So hope you all enjoyed this video and found it helpful. Make sure that you drop a like and let me know your thoughts down in the comment section below. What do you think about this stock? What do you think about this company? I would love to know in the comment section. As always, make sure that you drop a like, subscribe to the channel. Links to our Discord and Patreon is going to be down below. And do connect with me on Instagram. My handle is going to be CastWRP. Would love to connect with you there. And as always, happy investing, and I'll see you all in the next video.